Hello and welcome to BQ Prime. I'm Hiral Daria. Overall, the markets have now turned negative, and we have Nifty, which is trading below the 17,100 mark, as well as if you see in terms of Bank Nifty as well, that is below the 39,300 mark already. Where from here on is something that we need to wait and watch. To discuss the movers and shakers in trade today, we have Avinash Gorakshakar, Director at Research Profit Mart Securities, joining in. Welcome to the show, Avinash, and a very good morning.
Yeah, good morning here.
Avinash, firstly, let's speak about few of the newsmakers. You have a Sona BLW that is in focus as well on the back of Blackstone going ahead and selling stake. What's your view on the counter? Because clearly now there could be a lot of speculation and a lot of chatter that is around with regards to change of management, etc. How are you viewing the company?
See, I think Hiral, yesterday, this block deal for Sona, Com happened. What is interesting is that many strong hands, from the institutional side have picked up this stake, and that is a good thing. Overall, our sense is that with the increasing population of electric vehicles expected over the next couple of years, the Indian market is now well positioned for the electric vehicle kind of market. Or Sona has a very distinguished kind of customer basket of almost top 25 electric vehicle companies. And I think, earnings recovery could very well be seen in the next 2 years. So near-term challenges could continue, but I think over the longer term, I think this is one stock where possibly, obviously some re-rating can be expected. So in the short term, there could be some near-term pain, considering the fact that both US and Europe are going through multiple challenges. But longer term, I think this business has got a promising future. So I think, investors should take a longer term call here. In the near term, I think whoever expects a short term upside may not gain anything meaningful. But longer term, over the next say 2 years, if somebody were to hold on to this stock, I think you would definitely expect a decent upside. So I think net, there's still a long way to go for this stock to get related. But investors who hold the shares can definitely continue to hold on.
Right. Moving on, Krishna, Diagnostics is in focus as well. The stock did open gap up, and this was mainly on the back of the news where they've opened another 100 pathology collection centers in Mumbai, which actually takes the total to almost around 300. However, if you see the performance of the stock, it's been on a downward journey since listing, and the stock is down almost around 58%. I mean, we've seen a high of, in the last 1 year, we've seen a high of 655, and now it's around at 387. What's your view with regards to Krishna Diagnostics?
Yeah, I think one thing is very clear, Hiral, that the diagnostic space is witnessing a significant margin pressure. And I think apart from the, unlike the old COVID days where diagnostic companies were in big, demand. Now normalcy has come in, and I think since there's a lot of competition amongst all these players, I think margins pressure is going to continue. So I think as far as Krishna Diagnostic is concerned, this company primarily works on the PPP model with most of the government hospitals and has a large customer base in terms of the government category of customers. So I think one good part is that volume growth is assured, but margins will continue to remain under pressure. So I think here anybody wants to take a call on this company has to wait for at least the next 18 to 24 months, because our sense is that FY24 also would see a lot of margin pressure. And you're right in mentioning that the stock is, yet below its IPO level. So I think a lot of underperformance has already happened. So I think investors should watch at least the next 1 or 2 quarters very closely before taking a fresh commitment here. So I think fresh buying, obviously at lower levels could be a good idea, but definitely, people who hold the share can hold on, but fresh buying is not advisable at the current level.
Right. Moving on, on the SVB impact, everyone's views were in terms of, and everyone was watching out for the banking space. But now the shift has happened towards IT companies as well. A lot of brokerages are of the, opinion that this would impact Indian IT companies. However, the impact could be lesser for larger IT companies, but higher for mid and smaller IT companies, say for the likes of a Coforge, Emphasis, or even for that matter, intellect design. If you have to take into consideration these three IT counters and the kind of exposure that they have in the BFSI segment in the US, what would you advise investors to do, and what is your view?
I think Hiral very well, a very good question from your side. I think clearly BFSI is a very large opportunity for Indian companies, and I think companies like Intellect Design, Coforge, Emphasis have got large exposures to some of the US banks as well as the insurance companies there. And I think if there is any fallout, in the US banking market or maybe the US insurance company market, then definitely that puts a roadblock for these Indian companies. Although these companies have not stated whether some sort of order cancellations could come in, or maybe SVC directly they've got some exposure. Our sense is that the overall environment now is going to be pretty challenging, at least for the next 6 to 12 months. So you could expect a little bit of more underperformance from these companies, because clearly if the BFSI space underperforms, and especially for product companies like Intellect Design, if there are any order cancellations or obviously any kind of bankruptcy from potential customer accounts, that could definitely mean that earnings downgrade could come in. So I would be a little cautious on all these three companies. Would prefer to wait at least for the March quarter to get in, and then obviously get some sense from the management commentary as to what is the kind of ground reality for these companies in terms of the BFSI market in US. So I think as of now, hold on, but fresh buying at least at these levels would not be advised.
Right. So that's with regards to the mid cap IT space. Moving on, if you talk about a small cap stock, which is a Sequent Scientific, despite the broader markets actually being under pressure, this stock has seen a strong rally as well. In fact, since the time the company decided not to acquire 100% stake in Trinity Pharma, since then we are seeing that upside which has come in. If you see the performance of the stock as well in the last 5 days, the stock is up around almost 22%. What's your view with regards to a Sequent Scientific? Because clearly, in terms of the last 1 year performance as well, it's been on a downward trajectory. It hit a high of 156 and a low of around 61.8. But from there on, now we've started to see that upward journey. Do you think this is the time to start looking at a Sequent Scientific?
Yeah, I think my sense is that Sequence Scientists is in a very unique position. They are largely present in the animal healthcare space, and globally they are very well known for their products and formulations. My sense is, of course, this acquisition, which has got cancelled, is definitely a good positive, because that would have meant a lot of cash flow going on for acquiring this acquisition. And already, in some of the markets, Sequent has been very badly hit because of the currency factor. So hopefully things are now turning around. It would take at least maybe a quarter or two to see whether this kind of bounce back is supported by good financial numbers. Because as you said, Hiral, in the last 3 to 4 quarters, numbers have been very bad, and earnings growth has been virtually non-existent. So at least in the next 1 or 2 quarters, if the bounce is accompanied by good operating numbers, then I think this rally is justified. Otherwise, I think it would be a little unwise to actually buy the stock as of now, because the stock has bounced back significantly. So it's better to hold on for some time and wait for the March or maybe the June quarter, and then take a call as to whether any fresh buying can be done. So till then, it's a hold. I wouldn't advise fresh buying at these levels unless we see some confirmed earning recovery.
Right. Moving on, hotel companies have also been in focus on the back of the way demand has gone up. Simultaneously, there is a mismatch in terms of demand and supply. And the anticipation is that prices are expected to go up further as well. One stock that is in focus on the back of this is a Lemon Tree Hotels. If you see in today's session as well, the stock is trading in the positive. We've seen a high of almost around 103 on this counter. A slight bit of cooling off did happen, and now we are in that range of around 70 to 80 rupees per share. From a fundamental perspective, what would view of the hotel space, and would Lemon Tree Hotel fit the bill from an investment perspective?
Yeah, I think here Lemon Tree largely operates in the affordable hotel space, and they have a fairly large pan-India presence. Most importantly, this is one space where the larger, hotels like Indian hotels or typically East India hotels don't operate, because this segment is extremely price sensitive. So I think to that extent, Lemon Tree has a very large operating kind of bandwidth here. They have a good headroom for growing in the next say 2 to 3 years, and room expansion is also happening. I would believe the only caveat is that a large amount of debt has also been taken. So I think earnings growth would obviously be impacted partly by the debt. But given the kind of tailwinds which we are seeing in the hotel sector, especially in terms of the average room rentals and the kind of demand which is coming in from the hotel sector, my sense is at least for the next 12 to 18 months, the hotel sector should do well. And in that perspective, I think Lemon Tree at this level looks pretty attractive. Somebody who wants to hold on for the next say 12 to 18 months could definitely chip in at the current level, because we feel that most of the negatives are in the price, and further recovery in earnings, especially if you see the quarter 3 number, the company presented a very strong set of numbers, and which we feel should continue in the fourth quarter and in FY24 also.
Right. Moving on, you have Mahindra CI also, which has been in focus over the last couple of trading sessions. In fact, if you see in terms of Mahindra CI, fundamentals are pretty good. Today, the stock is up around, say, 2.5%. And from a 1 year perspective, it's given you returns of almost 110%. From a business perspective, what do you make of a Mahindra CI? Because now you have M&M as well, which has gone ahead and offloaded little over 6% equity in the company via a block deal yesterday.
I think if you see the third quarter numbers from Mahindra CI, I think very strong numbers, and I think this momentum will continue in the fourth quarter as well. Mahindra CI has got a good exposure to the passenger car, to the commercial vehicles, to the utility vehicle segments, and which are all experiencing strong double-digit growth. So my sense is, apart from the domestic market, they've got a lot of exposure to countries like US as well as Europe. So hopefully, I think the traction should continue. And I think despite the fact that Mahindra have sold a small part of the equity, I think again this equity has been gobbled again by large institutional investors. So I think there's nothing to worry on that count. And most importantly, auto remains a favored kind of sector, at least in our perspective. And to that extent, auto components should definitely do well in the next say 12 to 15 months. So I think even at the current odd levels, if one were to buy, one can expect a decent risk reward over the next say 12 to 15 months.
Right. And again, if you have to talk about M&M as well, what would your view be, taking into consideration the auto sales numbers that have come in, taking the rural recovery into consideration and the leadership status that M&M has in the tractor segment, and they are now strengthening their position in the LCV segment as well. SUV, again, they're trying to regain the market share. With all of this said and done, do you think M&M warrants a buy at this juncture?
Yeah, I think auto considers is according to us our favorite sector for the next 12 to 15 months. Looking at the kind of order book, Hiral, which they have for the automotive business, there's a very strong order book for almost all category of vehicles, including the XUV category, the Thar category. My sense is that at least in terms of order book, revenue visibility for the next 12 to 15 months is assured. Most importantly, commodity prices, especially steel prices, have come off, so margin pressure is definitely going to get more easy, at least in the coming 1 or 2 quarters. And frankly, now the next trigger for growth would be the electric version. They're looking at electric vehicles as the next trigger for growth. So my sense is, probably at these levels, it's a good opportunity to accumulate the stock, because unlike Tata Motors, which has got a large debt on its balance sheet, Mahindra is very well capitalized and extremely low on the debt factor. Plus, I think the earnings recovery is going to be pretty strong. So one could definitely look at buying a small quantity in the current markets when the markets are volatile, looking at the fact that next 12 to 15 months, we could see a sustained growth in earnings recovery.
Right. So that's with regards to an M&M. So a lot of stocks that should be on our radar as well right now. Krishna Diagnostics, Coforge and Emphasis, that's the mid-cap IT space, becomes an avoided current levels. Sequent Scientific, Lemon Tree Hotels, Mahindra CI, as well as and M&M. Thank you, Avinash, so much for joining us on the show and giving us those views as to what should be done with these counters in this kind of a market where we are seeing a lot of selling pressure that is coming in. Thank you. Stay safe and speak to you soon again.